Guys, call him an ex-banker. He's raised 19 million bucks, hoping to help folks mitigate hedging risks. For example, if you're selling a hotel bed in California to a Mexican travel agent who needs to sell it to Mexican residents in pesos, he'll help you hedge that risk. This risk can be significant with the euro changing, for example, the past 2 weeks, 8% against the dollar. It's a massive market. His hope is to get this product live in the next 6 months and process, call it $1 billion of hedging volume next year, of which he'll make 20 to 30 bips on. So call it 2 to 3 million bucks in revenue. Already has a team in place of 20 people looking to scale now with this new money. Hey, folks, my guest today is Aharon Nahman. As a former head of Barclays, CMA FX trading platform, and the co-founder of Israel's largest FX hedging non-bank, Aharon brings over 20 years of FX and risk management exposure to his current company, which is an embedded cross-currency solution called grainfinance.co. Aharon, you ready to take us to the top?
Yes,
All right,
let's go.
dumb this down for our non-finance people. What does that mean in a simple sentence?
For hedging for SMEs.
What you do, why people pay you.
That's I'm not sure. This we'll find out in the future. But basically, I have over 20 years of experience providing hedging solutions to a lot of companies, small, bigs, private individuals, high net worth. So I think we acquired some experience, and that's what maybe what I'm paid for.
So, Aharon, sorry, you got to dumb that down, right? So, hedging risk right now, right? So, there's two currencies. People want to do business together. Explain to us specifically what hedging risk is. Why do people hedge that risk on currency?
In a very simple manner, when you have an importer, for example, that is buying some type of an inventory, for example, an importer from the US that is buying, for example, inventory which is wine, okay, from Europe. So he's a dollar based. He's selling his wines in dollars, but he's paying for his wines in euro. So the exposure between the euro and the dollar is affecting him. So if he's buying it in euro, for example, and till he's actually purchasing it, the euro is going, increasing versus the dollar, then he can lose a lot of money basically by paying more. So what we're doing here is we're providing him with a hedge that he can fix his euro dollar rate at the let's say the inception of his order, and that's that way he knows how much he paid in dollars, okay, for something that he will be receiving in 2 months' time, okay, and then he knows, what will be the price for his end clients in the US that will pay for this price, and
Mm-hmm.
then the actual profit it will be the amount he paid for the specific wine and the basically the price that he sold the wine at dollars as well. So it's dollar versus dollar and not dollar versus euro.
How big of a risk can this be? If I'm a wine owner today, I run a liquor shop in California, and I spend $1 million to buy wine from Europe, today, but I'm not going to get it until 4 months from now. How much could that value increase or decrease after I've already put up the million USD?
Yeah, lately it's very volatile. So we can say that over the past even 2 weeks, the euro increased versus the dollar by 8%. So, for example, $1 million of inventory, you could have lost $80,000 or 80,000 euros just by waiting, for 2 weeks to pay for the actual wines. So that's a
Yep.
lot of money. For how much he would have sold those wines, in the US, but I'm not
Yep.
sure that his profit margin is 8 or 10%. So he can even end up losing in his business.
So that's your sales pitch, right? So you're selling to me now, the guy that runs the wine shop in California. You're saying, Nathan, careful, there's an $80,000 risk here. Pay me X to get rid of that risk, right? How do you work your pricing?
So basically, I'm a liquidity provider. So I have liquidities from a lot of banks, a lot of non-banks, and that's my business. So I can buy the hedge very cheaply. So for 4 months' time, I can buy the euro dollar hedge or the euro dollar forward, as we call it in our business, at a very good price. And that price I'm passing to obviously to the wine buyer. Okay, and I'm just making a small margin on that.
Oh, what's going on there, YouTube? Good to see you guys. Now imagine this. You love watching these interviews with SaaS founders, but imagine if we took all of the valuation data out from over 2,807 interviews I've done manually. Saves you a lot of time. Well, we've done this. We've built it into the beautiful interface inside of FounderPath. Check this out. I'll show you how you can access this in a second, but you log in, you connect your Stripe account, you see your valuation real time, you can see what it changed over the past 88 days, and even set goals for valuation this year. Now, the secret to valuation is there's many different ways to value a SaaS business. So the reason you're going to see 3 or 4 different valuations inside of your FounderPath dashboard, this is all free by the way, is because depending on who's doing the buying of your SaaS company, you're going to get a different valuation. A VC is going to pay a different valuation. Private equity firm is different. If you're going to do a minority sale, that's different. And if you sell the whole business, that's a different valuation. You can see all those when I hover over here. Right, so the teal is what a VC would pay, yellow is what private equity, and red is if you sold the whole thing outright. Now, what's cool about this is not built off random data. Again, you guys hear these interviews on YouTube. All these data are built from real-time valuation data points founders share with us on the show. So traction, 1.2 million, seed round, 3.7 raise, they sold 22% of their business. Go in here and filter by the event. Maybe you only want to see companies that have sold the whole business. Well, here are a bunch that have been acquired, the valuation and the multiple. Maybe you're going out right now and you're raising your seed round. Well, go in here and look at all this recent seed deals that went down, what they raised, what valuation they raised at, and what percent that they sold. There's never been a larger data set of SaaS valuations than what you can get now inside of FounderPath, and we're thrilled to bring it to you. All right, we're going to go back to the YouTube video here in a second, but if you want to check this tool out, if you want to jump in and sign up, you can check it out for free to get your valuation at this link, founderpath.com/products/valuations. Or if you go to founderpath.com and hover over products, click on get your valuation here and go ahead and sign up to give it a whirl. Again, all that valuation data live right inside the platform. I hope to see you there. All right, let's jump back into the interview. What margin do you reverse engineer for?
It's basically 20, 30 basis points, above my cost of hedging, which is actually very, very competitive. I mean, if he would try to do that, for example, versus, with his local bank, he would probably end up paying by 4 or 5% for this specific $1 million of euro-dollar hedge.
Yep. So 4% to a bank, 0.2 to 0.3% for you. So what does that mean for me as the guy buying the wine from Europe? What am I going to pay you to hedge this risk?
So you're just going to pay me, $1 million in 4 months' time, and I will deliver you the euro so you can pay your supplier in Europe. Okay.
Oh, I see.
That's the business we're doing.
Got it. So you're not making money. You're not making money then from me. You're making money on the other side.
I'm making money from the spread. So let's say I bought the hedge. If euro dollar now is 104, that's my cost. So I will sell it to you at 104.20.
I'm not. So give me that 104. What, $1.40, 104%.
A euro dollar is 104 now. So for €1, it's $1.04. So for €1 million of an order, you have to pay me $1,040,000. That's my cost. So for me to earn slightly on, because that's my cost, so I will quote you 1.042, which is this 20 basis point that I was mentioning earlier.
I see.
This 20, and that 20 basis point is basically $2,000, on a €1 million order, which is close to nothing.
So you're making effectively 0.2 to 0.3% on effectively the money flowing through your system, right? Your GMV if you were a marketplace.
Exactly.
I see. All right, let's get more of your backstory here now that we understand sort of the model. And by the way, are wine buyers in the US buying from Europe your number one customer?
Sorry? No. They're from different areas.
Well, what is your top 3, don't name the customers, but the top 3 groups that you serve, what are they?
Actually, now what we're serving, we are more of an embedded finance. So we are providing hedging, to travel platforms in the travel industry, So for example, a bed bank that is selling hotel beds, to local agents. So we will provide hedging solution, like our engine will provide him prices that he can quote his local agent in their local currency. So, for example, if you have an hotel bed in the US that he has a Mexican agent that is selling rooms to Mexicans, okay, which is a little bit complicated, but we can give him the hedge so he can quote the hotel bed price in Mexican peso for his Mexican agent. And the Mexican agent can pass through the Mexican peso price to his local client.
So are you making a flat fee from the hotel bed owner in the US or the Mexican agent, or no?
So we're still going to make the same spread that I mentioned earlier.
No, I know that, but is there a flat fee on top just to use the embedded finance tech stack?
It varies between currency pairs and the tenor of the hedge. So a hedge for example, for 1 month and a hedge for 1 year is slightly different.
Sorry, what I'm asking is a lot of these embedded finance products will make money on a spread like what you do, but they also then have like traditional SaaS revenue or recurring fee for the hotel bed operator in the US.
No fees.
You have no
fees.
flat fees.
No.
Okay, very cool.
Just
all right.
spreads.
Give us a history here. When did you launch the business? What year?
About a year ago.
Okay, so fairly new. Okay, got it. 2021. And was your first customer someone running a hotel bed in the US, or how did you get your first customer?
Obviously, look, we've raised, we are well funded, okay? We are about a team of between 15 to 20 employees currently. And we have head of marketing, head of biz dev, have a head of CTO, CPO, everything. And our new customers are actually, we have 2 big hotel beds, okay? One of them is coming from Israel and one of them is actually coming from Singapore and Japan.
Okay. But are you pre-revenue today? Then you're not live with them yet?
Yes, pre-revenue. But
okay, got it.
Let's say December, January, we will start generating revenues.
I mean, that was kind of funny, right? I asked about your first customer and your answer was, we've raised a lot of funding. I'm like, okay, he must be pre-revenue because I like revenue, obviously, more than customers. But obviously, I guess the question I would ask you is, you have quite a track record in this space, right? Looking at your background, why do you need a bunch of money to launch this? Why sell all that equity early on?
Look, it's basically, it's very expensive, to build such a platform. I'm saying tech, okay? Because I have businesses today that they're doing it in more of a manual way. But to do it, on a scale and very technological, it's very expensive.
Yep. How many engineers make up the 20 today?
Almost half of them.
10. Okay. Wow. Okay. And I guess how much did you raise?
$19 million.
19 or 90?
19.
19. Okay.
I wish 90, but 19.
You'd have no equity left if you raise that amount. All right. So you raised $19 million and that was the first money in?
Yes.
Okay. Well, that would be a very large pre-seed round. It was really it's more like probably a large seed round is how you would call that, right?
Exactly. It's a seed round. Basically, the money, we got the money from, very good funds that they really believe in the team. Because
that's all. Just to be clear, that's all equity. That none of that is a small like debt fund or a warehouse facility. All equity. Okay.
Yeah.
And most folks these days are selling between 15 and 20% equity in seed rounds. Did you sell about the same amount?
Sort of, approximately.
Okay, higher or lower?
A little bit higher.
Okay, a little bit more. So this was very dilutive for you. Was this a very strategic partner?
Not very diluted. I don't see it like that.
Well, you sold more than 20% of the company. I would say that's very dilutive.
I know, but we also raise a lot of money as well. And we want to build something that is very robust, that will be, a real legacy. So for me, let's say if I look in 10 years down the line, and I'll have even 2%, but from $30 billion business, I'll be okay with that. I don't care about the percentage.
It's a big risk though, Aharon, right? How many companies that started 10 years ago are worth $30 billion today? You're taking a massive swing and it's a big risk, but it's much harder to accomplish than going and building a $10 million bootstrap company that profits $5 million a year.
But I see risk differently, actually. For me, once, I've raised the money and we have employees, so I need to secure them and I need to secure the company. So the more money I have, it's the less risk, I think, for the company.
No, I would argue it's significantly more risk the more money you raise. Significantly more risk. You have to grow faster. Everyone burns more. You lose your creativity because everyone wants to throw money at problems. I would argue it's way riskier to raise a lot of money.
So I disagree with you on that. I disagree with you on that. And we are very patient. I'm not in a rush, to jump on any solution or to try and get every client. I have enough experience, to do the right thing, and that's why I raised a lot of money from these specific VCs, that they know that we will do the right thing, okay, in order to be here for a long time. So
Yeah,
it's a different matter. I'm not like, let's say if I was 20 years ago, maybe, I would try this, I would try that. I know exactly where I'm heading to. Obviously, we're making some mistakes now. We'll make some mistakes in the futures, but we have enough, knowledge and experience to take this company, okay, to higher levels.
Yeah, well, listen, I'm not rooting against you, obviously. I hope you have a big success, but I want my audience to understand, if you put 100 founders in a room, right? First off, only 2% of them are going to be able to raise at all, right? So you're one of them, right? So 2 out of the 100 raise, right? And I mean, wait, 1 out of 100 investments a VC fund makes returns the fund becomes worth 30 billion, right? So you're looking at like 0.2 out of a room of 100 founders, right? Actually go and do what you just articulated, versus the other 100 founders in that room. If they go build, I mean, it's way easier to build a $5-10 million revenue company and profit 2-3 million a year, right? I would say it's way less risky to build that kind of company.
No, I agree with you on that, but I see differently in that matter, that if I'll raise just $5 million, I think I would put my company in a very high risk that it could go bankrupt, in a year time, because we're not going to have enough funding for the next one. And
or you don't get enough customers, right? That's what makes a company go bankrupt, is you don't have customers willing to pay, right? I mean,
yeah.
I'm sorry. I'm not saying you. I'm saying in general, in the market, you do. It sounds like you have 2 customers lined up. I'm saying, generally speaking, the risk is you raise too much money for an idea that you then build, spend a bunch of money on, and then people don't end up buying it. That's like crap. That's a bad situation.
Yeah, but the beauty with us, that we do have this experience and track record. And I have my own company that is actually generating, very nice revenues here in Israel. We are obviously the non-bank. They're doing, the most business with the small, medium businesses. So the VCs that invested in us, they can see the track record. Okay.
What is your track record? What were you doing before this?
I was basically head of trading in Deutsche Bank and Barclays. In Barclays, I used to run CIMEA, which is Central, Eastern Europe, Middle East, and Africa, in FX and rates. And 6 years ago, I found a company in that specific area as well, providing hedging for small, medium businesses in Israel.
Oh, so there's Saham?
So, and in that specific company, I have already 1,500 companies that are doing business with me. So, we know what we're doing.
You're talking about Horizon, right?
Not Horizon, it's called Al-Shuro Shacham Financial Services. Horizon is the crypto.
That's the crypto specific arm.
I have 2 companies. Yeah, one is the Al-Shuro Shacham Financial Services, which provide hedging for small, medium businesses.
And there's 20 people. There's 20 people full time at that company, according to LinkedIn.
There are more employees actually. This is the company that it's only the Israeli-based companies servicing only Israeli clients. Okay, and this is a very profitable business. And this is that company was a bootstrap, no funding raising at all. And the core company, which is Grain, that we've raised $19 million. This is for international. So basically, to conquer the whole world, US, Europe, and Asia, to provide hedging solutions on a scale, on a technological level.
Is this financial services arm, though, serving only Israeli clients, included in the cap table of the combined? They're separate companies.
Separate companies, yes.
How did you get investors in Grain comfortable with this massive side project you have that's still operating today with a lot of employees and bootstrap?
Well, over there I have, it's like you're asking Elon Musk, how does he can run SpaceX, Tesla.
Well, no offense, but I'm not Elon Musk. You're not Elon Musk, right? I'm not Elon Musk.
No, I'm not worth $200 billion, but obviously I can run 3 businesses. And over there, by the way, I'm only serving as a director, and I was founder of that company. Okay, I hardly spend any time there. There is a CEO, CMO, everything there. The company is running by itself. I'm just on the border. Once a month we have a board meeting, and that's where I'm giving my my experience and knowledge to help them. go
Yep.
further in that respect. So
Well, you've already cut your teeth bootstrapping. You're taking a very different approach on this one to go conquer the world. We're certainly rooting for you. We'll see what happens. What's your goal next year? How much volume do you want to process?
I think we're going to be up to $1 billion of hedgings through this specific vertical, which is called the travel industry.
Over
That
what
would
period of
be
time? Next 12 months?
in 2023, which you can say over the next 12 months. We're at the end of
Okay.
the.
But look, this is going to be sort of a strange question, but isn't that too slow? The reason I say is if you're only making 20 bips on $1 billion in GMV, that's only $2 million bucks of revenue. You just raised 20 million bucks. Isn't that too slow of growth for a company that just raised 20 million bucks?
No, because it's very exponential. Because in 2024.
Well, you're going from zero, by the way, right? Though, of course, it's exponential.
No, I'm saying exponential. Then in 2024, we will have probably between $5 to $7 billion of hedging, and then it's going in exponential way. So 2024, 2025, probably we're going to be like 15,000. So that's going to be the sort of the scale.
Yeah, but even at 15 billion at 20 bips, that's assuming you hit that with ambitious goals. That's 30 million bucks, I think. That's obviously on par with what VCs want to see. What's the total amount? If you get this whole market, what's the total amount of processing you think you can power?
No,
hedging.
It's trillions of dollars. You know how much money is moving now, currently, every day in the hedging market? Trillions of dollars a day.
Yeah, but are you talking about just about hotel hedging and travel hedging?
No, not hotel. We're starting with the hotel vertical. We're going to go into account payable solutions, so to a lot of those platforms. Yep. Logistics. We have few verticals. We're starting with the travel vertical.
Yep. Well, hey, we're
actually we are very ambitious in that respect. We can see ourselves as the Goldman Sachs of the small medium businesses worldwide. That's the ambition. Okay, that's where we are aiming for.
Yeah, look, I mean, it's a lot of money to going from, if you launch in 2021, you're basically saying it's going to take you 2.5 years to do $2 million of revenue, right? Because that's what $1 billion of GMV would be at 20 bips, right? It'd be 2 million by the end of next year. And then you're off to the races. So we'll see what happens. We're rooting for you. We're out of time though for today. So let's wrap up with the famous 5. Number 1, what's your favorite business book?
Actually, I don't have a favorite business book. I'm more into physics, and I can tell you what is my favorite book in physics, but not in business.
Go ahead, physics.
The only business book that I can really relate to is the Warren Buffett book, which was the Warren Buffett Way, which I read 20 years ago.
Yeah, that's a good one. Number 2, is there a CEO you're following or studying?
Read lately Steven Schwartzman from Blackstone, which I wasn't really impressed actually, but that was the latest one I read.
Number 3, what's your favorite online tool for building grain?
Sorry?
Favorite online tool?
Favorite online tool? Don't have any one specific.
Number 4, how many hours of sleep do you get every night?
7 to 8 hours.
That's good. And situation, married, single, kids?
Divorced, but I have a partner now.
Fair enough. Any kids?
Yeah, 2 kids.
2 kids. Okay. Yes. Oh, great. And how old are you?
49.
49. Last question. Something you wish you knew when you were 20 years old.
No, not really. I like every basically I say every age or every decade. I like to live that decade. I like to make my own mistakes, learn from them, live, experience, and take it from there.
Guys, call an ex-banker. He's raised 19 million bucks, hoping to help folks mitigate hedging risks. For example, if you're selling a hotel bed in California to a Mexican travel agent who needs to sell it to Mexican residents in pesos, he'll help you hedge that risk. This risk can be significant with the euro changing, for example, the past 2 weeks, 8% against the dollar. It's a massive market. His hope is to get this product live in the next 6 months and process, call it $1 billion of hedging volume next year, of which he'll make 20 to 30 bips on. So call it 2 to 3 million bucks in revenue. Already has a team in place of 20 people looking to scale now with this new money. Aharon, thanks for taking us to the top.
Thank you very much.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.